Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical support and demand area for this market. In fact, from here, all these multiple rejections to the upside have been created. And what we can see is that at the moment, the market is testing this exact same zone, and there is a possibility to see some bullish price action being created away from this area. So from a monthly standpoint, everything seems very bullish, and we could expect some bullish continuation created away from this level. We can also notice, if we zoom in into the most recent price action, that we have a strong impulse followed by a correction. And in general, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.786 Fibonacci retracement lining up perfectly with this previous level of support and demand that we have just identified, which creates confluence of support. And inside of a confluence of support area, you could expect to see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from the level. And we will be speaking more about institutional longing when we go and analyze the order flow for this pair. For now, let's drop down on the weekly time frame and see what we have. Well, from a weekly perspective, we can notice how the market has just created a bullish pattern. In fact, in creating this move lower, the market has printed this overextended M pattern from a weekly standpoint. And after the creation of an M pattern, you would expect the market to create a rejection to the upside. That is what usually follows the creation of such pattern. And dropping down on the daily time frame, we can see that also from a daily perspective, we have an M pattern. More precisely, we have an overextended M pattern, with the market from here printing this push higher, correction, continuation to the upside, and then a push lower. This is in overextended M pattern, and after the creation of an overextended M pattern, you would expect a push higher. For the market to complete the pattern with a correction to the 0.32 of the Fibonacci taken on the impulse leg, which in this case would be around this area. This is the completion zone of this type of pattern. So from a daily perspective, we could expect a potential push higher for the market to reach the 0.32 of the Fibonacci taken on this daily impulse leg. Now, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, the first thing to keep in mind is that if we're checking the data for the euro, we're actually already looking at EURUSD because all currencies on the spot are traded against the USD. And what we can see here is that net positions just got increased from 16.7k up to 32.7k, meaning that institutions have been moving to the bullish side for EURUSD, increasing their net positions, therefore shifting their positioning back to the bullish side for this pair. Now, this is perfect because what we have seen from a technical perspective is that already we have bullish patterns, precisely that overextended M pattern on the daily, inside of a support level from a monthly standpoint. So in a level like this, you would expect to see institutional longing, which is in fact exactly what institutions are currently doing. Now, by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also in the description, so you never miss new updates. Now, back to the analysis. As I was saying, in a situation like this, what could we expect? Well, if we have this overextended M pattern here on the daily, what we could expect is to see even more institutional longing, which at that point could further increase the probabilities of this potential push higher, completing this overextended M pattern on the daily and also rejecting that monthly support that we have identified at the beginning of the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this overextended M pattern at 0.32 of the Fibonacci taken on this impulse leg. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.